or tell us when, or the stream is live.
There we go. Rock and
There
roll.
we go. We are
Good morning,
live.
gentlemen.
Let's strike a blow for capitalism, shall we?
Let's
Start
tweet
your
this.
engines.
Let's tweet it out. Let's put let's do live and live now and stocks. There we go. And I'll shut that off. Good morning, everybody. It is May 18th. This is Wall Street Beats. I'm David Maris. We have Bob Morris and Kevin Baker here with us this morning to talk about all sorts of things, fancy charts and oil and gas, the Straits of Hormuz. I mean, that's what I figure you want to talk about, Bob. Let's start with you and oil and gas. And anything happened over the weekend that we should be aware of? Is oil back down to $60 or what's going on?
No, what happened over the weekend is my app that shows pizza delivery activity was super high around the Pentagon yesterday. So a lot of activity, a lot of meetings going on at the Pentagon. I mean, that's true. That I got that app; it shows that. But we're at the
and your point is that the last time that happened, there was a correlation between, hey, people working late at the Pentagon means we're going to be doing something involving the military.
Right. And I think we're at that point if there's not any breakthrough negotiations or some agreement. And, Trump is saying time is short. And he said that if they didn't come through with agreement a week ago that was satisfactory, that bombs would fly. And I think he sort of paused on that for a week, given the meeting with Xi in China. And while he's waiting to still try and push some sort of diplomatic solution to end the war. But Iran, the current regime or the mullahs in power, continue to play this stall game that we've talked about from the very beginning, hoping that they can stall long enough that Trump administration would hit some political roadblock, either domestically or internationally. But the fact is they've held very firm in not wanting to negotiate anything on their nuclear program or their enriched uranium. And there's even some talkers, news stories saying that the U.S. would send in troops to physically remove 50 canisters of enriched uranium from Iran and fly them out of the country. So, I mean, that seems like a pretty extreme move in that it would involve boots on the ground. But I do think Trump is at the point of saying, look, either come to the table and give up your nuclear ambition or the bombs will fly. And he had said, too, that they would wipe out all their power. He put in a post on True Social Media that they would blow up all their power facilities, Carg Island, and all their oil wells and oil facilities. So would he go that far? I don't know. But we're at the point where something has to break in the next 2 weeks, in my opinion. It could be today or tomorrow. But I think in the next 2 weeks, something has to break either way. I do think that the pressure with the embargo on Iran is working. It is causing a lot of strife internally. We don't know what sort of infighting is going on among the leadership in Iran. If they're on the brink of some regime change or crack in the leadership, we'll see how that plays out. But I do think that in the meantime, Trump may give it, a little bit more time to see if these economic sanctions and pressure economically will work. I don't think he gives him more than 2 weeks, and he may not give him more than a couple of days, but we're at that point where something needs to give. And it's sort of concerning in the sense that the current regime, I think, is not going to give in on the nuclear ambition. And so we'll see if there is some regime change or new leadership steps in or what happens here. But oil's off this morning. I think the market's hoping that we get some solution one way or the other here, and that the Strait of Hormuz does open. If Trump goes in and bombs all their power facilities and Carg Island and everything, the Strait of Hormuz will be open, but there won't be an Iranian oil flowing. But we've got enough backed up on ships and tankers and waiting to move through that strait that could provide a little bit of near-term relief.
So for people who don't really understand, and I'm one of them, Carg Island and its importance. I mean, why is this so important? And if we blew that up, does oil go to 150, 175? How disruptive is that?
That's sort of the terminal where Iran exports their crude oil, but we're not letting them export any anyway. We're not letting them, their cargoes are not moving out of the strait or to the market globally anyway. So that sort of shuts down their capability to export crude oil and to have revenue from oil is basically what it does for an extended period. I think that's sort of the extreme case of blowing up Carg Island. I don't think you really want to do that because you want to preserve that capability under any new regime, or if the current regime is willing to give on their nuclear ambition. You want to be able to have that oil flow because that's supplied to the global market. But if they don't have any ability to export crude oil, they don't have any revenue. And so that's the importance of Carg Island. They don't have power. They don't have.
Now, is that something that you can? Is that something you can blow up partially, or is it no? Look, once you start, is it like a clock?
Gas starts to go up in New Jersey.
You can blow up anything partially. Yeah.
No, what I mean is it like a clock where if you blow up part of it, that it's still not functional?
Yeah, you can blow up part of it, and it's just how much you blow up, and then how much time does it take to repair it or replace it or fix it.
Yeah, so, it seems like there were reports out over the weekend that she said that it's important that the strait remains open. I can imagine why they think it's important that it stays open. But I don't know if there was something veiled in that of like, hey, there's some diplomacy happening on the other side that's going to change things in the next day or two. But I wonder if that's why oil is down a little bit today.
I think it has more to do with the fact that the market thinks we're getting closer to a break one way or the other. Something's got to give here. I mean, Trump's running out of patience. He's running out of political clout to keep this going domestically too.
Yeah, but so last night or this weekend, right? He won the Louisiana senator primary race. Like, so I think that might make him a little bit bolder. That his brand still has a lot of power. And second-term presidents, right? They sometimes don't care as much about holding on to Republican base as they would otherwise.
Yeah, but he's still holding onto a thin margin in the Senate and keeping them from passing a war powers bill. So he lost a little bit of ground on that. So, we'll see. I'm as far as the oil levered stocks, the CNQs, EOGs, Diamondbacks, Chevrons, Exxons, I'm holding on to those. There's still going to be some geopolitical premium in the oil price. Like I spoke about a little over a week ago, my range on the oil is 80 to 120. $80 a barrel is if peace breaks out tomorrow and everybody says, okay, it's going to open up. They've agreed to do what we want them to do for now, and we'll see how it goes. Best case scenario, near term, it could pull back to 80. And that's sort of where the long-term contract is if you look at, January, December time frame. 120 is the upside if all hell breaks loose. And, they fight back and there's just complete disruption in the Strait of Hormuz. And it looks like that could then extend for any period of time. So that's sort of where my range is. We're smack dab in the middle of it as we're waiting to see which way things break here.
All right.
In the meantime, natural gas prices have popped back up to $3. It's hot here. All of a sudden we're getting heat in the Midwest. We're getting heat in the Northeast. And we talked a couple of weeks ago how we saw that the natural gas stocks were looking a lot more interesting. And while we had overweight positions in our two favorite gas names, Expand Energy and EQT, we said we looked at any pullback to add to those. We didn't get any real pullback. We got a slight pullback, but they sort of bounced back here. But I think you're at the point where you're probably not going to see a lot of downside to these natural gas stocks, at least near term, now that we have summer here and you're starting to see demand pick up for cooling load. And we've still got the long-term case of higher demand from data centers and LNG exports and just industrial growth. So these names are names that could see some inflow if oil were to crack and people took profits in the oil names. I think a lot of that money would flow into these natural gas names, given what I see as limited downside to those and the strong fundamentals domestically for natural gas.
All right.
So you were looking at some of the ETFs for natural gas that look pretty attractive here on your technicals.
You know, Bob, you're getting so good at this. Your segues are just, velvet-like. Yeah, that's phenomenal. What I am looking to do is, where's my other chart? Hold on. This is FNG. Can you see that? First Trust Natural Gas.
Yep.
This to me, and I'm 2/3 of my way of going through 5,000 plus charts, 5,500 to be exact. And, I stop on things that catch my eye, and I try not to look to the left side of the page. So I try to stay as agnostic as I possibly can, or dispassionate. And if I could draw lines, which I can't because I hate my chart service right now, but this looks like a pendant happening. This is certainly a base. This is FCG, the First Trust Natural Gas ETF. 2750 is the low, 33 is the high, and it's consolidating on what I want to see. Benign down volume and increasing up volume. And what caught my eye after I do this, I go look at the ETF fact sheet and look at the top 10. And I mentioned this to Bob offline that Oxy, Occidental Petroleum, EOG Resources, and Diamondback, FANG, are the biggest three names. And to my, relatively untrained eye, those look oilier names, higher oil production versus natural gas. And EQT, one of Bob's favorites, was number 5 or 6. And so Bob, give me your thoughts on, why those are the biggest two names in natural gas, if it's total, BCF production that might get them in the list, or what your thoughts are.
Sure. I mean, they're two of the purest natural gas names in the sector. The other big natural gas names are Intero and Range. But Expand Energy, I like the dividend that they're paying, and I like that they're almost a pure natural gas company, the largest natural gas producer in the U.S. And this new interim CEO is pushing very hard to integrate the company into some of these downstream infrastructure, whether it's LNG exports or international markets, just trying to grab on to capture more of the value of the price downstream, whether it's data centers or where they can be lead in capturing the best price for natural gas as some of these projects evolve. And then EQT is in a similar situation. I think management there is doing a fantastic job. They're already somewhat integrated, but they're in a great position too for some of these data centers are going to be built, and how they position the company to take advantage of higher natural gas prices. Again, as the three demand factors develop or evolve, as I just mentioned. So those would be my two favorite names. I like management. I like the dividend on Expand Energy. So the interim CEO makes me a little nervous about how they do look to do deals. He's aggressively looking to do deals. So that makes me a little nervous, but those are the two names that I prefer.
So one of the deals that was announced today, I don't know if you saw it because it just came out, the Next Era is buying Dominion. Now, what's funny is TheStreet.com says that it's a $400 billion buyout. I think that's misstating it a little bit. Yeah. Everyone else is saying it's about $70 billion. But is there another play for this there where you say, oh, yeah, well, if there's going to be consolidation, it's going to be this?
I don't see another play. I think this is more of a one-off. You're taking Nextera, which is predominantly focused on Florida, and they're acquiring Dominion, which is in Virginia, West Virginia, more the Southeast. So they're creating a bigger overall player in the Southeast. It's going to provide economies of scale, and it's going to provide a little bit better credit rating and credit quality for the combined company, which will give them a lower cost and greater ability to continue to expand in a region, the Southeast U.S., where demand is growing very strongly. There's a lot of migration into those Southeast states. So it does make sense from that perspective. But I don't right now, and I need to do a little bit more work on the utility side. I don't see another combination that fits hand in glove like that in providing the scale and the credit quality that they'll gain in this deal here.
So
you match up Florida with other states in the Southeast, so you're just kind of expanding that whole block. So
if an ARB were calling you today and saying, like, look, what's the chance that this doesn't go through? And I think of like the idea of family farms, one of the reasons that it's great to have independent, smaller farms is that you have greater food stability, even though it seems counterintuitive because giant farms can do things more efficiently. It actually, not having things tied to one highly levered, large mega conglomerate is probably better for food stability in the long run. That said, is there anything like that here where you say, well, look, these giant utilities increase the risk for the grid rather than making it more stable? Like, is there a chance that the FTC says, look, we just don't want this, or any other government agency?
I'm not the expert on that. I haven't done a lot of work into that, but my initial gut sense is that I don't think the FTC would oppose it, in that you're not creating a monopoly in one region. NextEra is in Florida, Dominion is in the other adjacent states. And I do think it creates economies of scale, and they're going to give a big credit to customers. Part of the deal is they're providing utility credit to the Dominion customers. So again, I'm not the expert. I haven't looked into all the regulations around the utility industry in this sort of case, but my gut feeling is that it should pass FTC.
Hey, David?
Again, I'm not the expert on that. I haven't done work on how this might play out in the utility industry. So I'm just sort of shooting from the hip when I say that I think it would pass regulatory approval.
All right, Kevin, what did you have? What did you say?
What caught my eye was that 19% of NextEra's electricity production comes from nuclear, and Dominion 25%. But they don't show up in the more pure play, if you will, uranium and nuclear funds, because they have such a preponderance of wind and solar in the balance of their production. So my suspicion is this is going to be a clean energy darling that gets an audience once the dust settles with the ARBs. But it's a nuclear play as well, which intrigues me because I'm long-term bullish on uranium. So I just bring that up.
Yeah.
All right, Bob, do you have anything else before we go on to some of Kevin's names?
Not today. We'll see how things evolve, like I said, over the next days or weeks on the Mideast side. So,
all right. Well, let's hope for peace. Kevin, what did you also have? You had BITI and a couple others.
Yeah, let me take. Let's hope for peace, but prepare for war, I think is the good advice. So I'm going to come back to you when I see First Trust Natural Gas take out 31.68 and 33.03, and I don't think it's going to take much because while oil has screamed, natural gas has done nothing, and if natural gas does something to the upside, I think we'll make a lot of money here. And oh, by the way, take a look at the long term here, especially Bob. This is a great cup and handle, but this has done nothing for 11 years, pretty much. But your all-time highs are back here, substantially higher, 4 or 5 times where they are now in the halcyon days of natural gas. So, this is, I'm not catching off the bottom. I never do. But, this to me could be a really nice launch pad if it takes out those levels that I just mentioned. So it's a good way to, buy natural gas in one fell swoop if you're like me and I can't buy individual names.
Yeah.
All right. So what else did you have?
I have a phone call coming in apparently from Maris. No, I have, this intrigues me. This is the U.S. Treasury bond ETF from iShares, GOVT. And if I go through anything, munis, mortgage-backed securities, they all kind of look like this. But what got me was, we all understand that interest rates go up, bond prices go down. But this is a gap down on big volume here. And it's very pronounced. And this is treasuries. This is pristine. Well, it's AA now, but you get the idea. And 55% of the fund is in maturities under 5 years, and 80% is below 10. So the shorter end of the curve is going up. It's hurting bond prices. And I think that I don't care what Warsh says, and I don't really care what the Fed says. The market is saying that bond prices are going down, probably mortgage yields are going up, and that has all kinds of ramifications. So if this was just a run-of-the-mill correction, I'd say okay, but it's not. It's a more defined breakdown that then threatens these prior lows back in May of last year. So stay tuned, but I think interest rates are going up a fair amount. And I want to get on with Ben because I think he disagrees with me, but I'm just looking at what I see here, trying to be a technical chart umpire, and I don't like what I see with U.S. Treasuries, the best credit out there, but the investment grades and the high yields look similar.
All right. What else? Is that it?
I got one more, and then I want to hear what my healthcare aficionado has to say. This is BITI, and this is far from perfect. This is shorts Bitcoin via the futures and the swaps. This is the ProShares Short Bitcoin ETF, BITI, and it's just starting to perk up. But I'm watching it because the strategy conference call reverberates in my head where they said we're going to do I'm paraphrasing, but we're going to sell some Bitcoin to pay our dividend and inoculate the market. And I want to see how the vaccines work on inoculating the Bitcoin market, because I'm not that smart, but when the biggest disciple and leader of the Bitcoin maximalist says we're going to sell some Bitcoin, and they've been the biggest buyer of Bitcoin for 10 years, is the market just going to say, sure, I'll buy the Bitcoin that Michael Saylor is selling? My suspicion is no. I don't see a lot of evidence, but I'm going to stay tuned here. So when Bitcoin BITI, the short ETF, takes out 24.97, we're $3 below that right now. When that takes that out, I think Bitcoin could be in for a swoon. So I'm not calling for it now, but I am going to watch when there's a filing that says Saylor and Strategy sold 1 million Bitcoin or 500,000 Bitcoin. Does the market take it on the chin, or does it hit the mat? And stay tuned here, and hopefully we and members will make money.
Sounds good. Well, as a moderator, I'm not obligated to have anything to talk about today, Kevin, but
I know
I will tease what I might talk about tomorrow. So I'm going to talk a little bit about it today. And first, the two little names that I've been talking about recently are Teladoc, which has done pretty well. We're up about 14 to 17% since I mentioned it. So I can't, I won't say that that's too bad. This is the company that has telemedicine, and it has BetterHelp, which is the teletherapy, and then they have an industrial or piece which is doing really well. The BetterHelp is not doing very well. They reported it wasn't. It was at 100% as expected. In fact, better than in some ways. In that BetterHelp declined worse than expected, but the industrial side of the business did a lot better. So have to be happy with that one so far. This is a long-term turnaround, so this isn't. I think it's going to be a multi-bagger, but those don't happen on the time frame that you want them to ever. So that's one to keep an eye on. Just though, to talk about a different name completely, MANE, Veradermics, probably a company you've never heard of. It's a small healthcare name. It's symbol MANE, and it's about a $4 billion market cap. And the reason that their symbol is Maine is because they're working on a hair loss drug. Now, vanity tickers are always fun to play with, because it means that companies have spent more time on the stock symbol than maybe on the company. I'm not saying that's the case here, but I'm interested on this on the negative side, and I think individuals shouldn't short stocks for a variety of reasons. If I owned it, I probably wouldn't own it. Like that's the best way I can say it, is that if someone gave me the shares, I would sell them and take the cash. And the reason for that is that, sure, what they're working on might work. This is an oral minoxidil, but there are lots of reasons that it might not. And there are lots of reasons that even if it gets approved, that doctors aren't going to be using this left and right. So I'm going to talk about that tomorrow, but keep an eye on this one. This one will take a while. If you look at the chart, Kevin, maybe you can talk a little bit about this chart. It is an incredible rise from what in February it was $38. Now it's $100. So
are they making money?
You said you wouldn't keep the stock, but would you take the pill?
I think the three of us should enroll in the trial.
We're not just stock pickers; we're also clients.
Yeah, no, I
don't want to say that because that would be very bearish for Maine.
No, I'll tell you, I wouldn't, Bob, and you're probably not on the show tomorrow, and since you're probably quite interested. Oral minoxidil was worked on before a long time ago by Upjohn, and it's still on the market, but it has a black box warning. It's the last resort for its use. The topical is still used, but the topical minoxidil is used in such a low concentration that it doesn't get systemically involved. What Maine believes that they've done is they've come up with a formulation that doesn't have the problems that the current oral does. And sometimes people do invent new things. Sometimes people say they've invented new things and it isn't a new thing. And so I'll leave it at that. I've already said more than I wanted to for today. But Maine is one that if I owned it, wouldn't be surprised if it goes up a lot more if they do get an approval. But first, I think that is unlikely, and the second is if it gets approved, it's not going to. I don't think it will do very well. So. How's that for us?
We'll tune in tomorrow to find more, to learn more.
No, exactly. You're the segue kings right now.
Not a lot, actually, not a lot more, to tell you the truth, not a lot more, just because I'm starting to do the work on it, and I may completely change my mind. It's just I've seen this type of thing before where companies say they've come up with, there's a company that I took public called Flexion. FLXN was its name. It ended up being acquired at a price far below the IPO. They got their drug approved too. They reformulated an existing drug using a new technology, and Lilly couldn't get it done. Lilly gave them the rights to the drug. And so that was a success in that it made it to getting approved, but doctors didn't want to use it. And so I think it's still selling around $100 million when my original thought is that it could be $1 billion drug. So I was wrong on that. And guess what? That's it's a good lesson. But with
this
that,
has got to be private pay, right, David? If it works out hypothetically.
Yeah, it's going to be private pay. It's going to be private pay. There are also a whole bunch of alopecia drugs that are right on the cusp of being approved. So, look, I personally would never take a drug that was recently approved where the original drug has a black box warning where I could die from the original drug. Like, it's not a black box warning of like, hey, you might get a rash. It's you might die. So yeah.
Other than that, Mrs. Lincoln, how was the play?
Let's wrap it and say it's 10:30. It's already the 18th of May. Go to wallstreetbeats.com and sign up if you want to hear more about stuff that we're going to talk about in our chat and the rest. Go to passes.com/wallstreetbeats for the same subscription and even more goodies. For Kevin Baker, Bob Morris, I'm David Maris. Have a great week, everybody.
Thanks all.